Hello guys, welcome back to my channel. If you're new to this channel, please don't forget to hit the like and subscribe button. In this episode, I'll be showing you how I analyze my chart, the steps that I follow, and the processes um, that I take. So before I analyze my chart, like there are three steps that I actually follow, and the first step is to determine the direction of the market. Like once I open my chart, the first thing I ask myself is which direction is the market going. Like there are three directions the market could go. It could be going up, which is an uptrend. That means the market is making series of higher highs and higher lows, or it could be doing going down, which is a downtrend, meaning that the market is making series of lower highs and lower lows, or it could be in a range bound market, meaning that the market is not making any movement. It's just up and then up and then. So if you look at the chart now, I am on Euro USD chart on the daily time frame. I guess it's always very important to actually start your analysis on a higher time frame. Like the importance of starting your analysis on a higher time frame cannot be overemphasized. The reason being that the higher time frame helps to eliminate the noise on a lower time frame, also helps to compress the candles and makes it easier to see the direction of the market. Your higher time frame could be 4H, it could be daily, it could be weekly, it could be monthly, depending on the type of trader that you are. I start mine on a daily time frame because I'm a day trader. So if you look at the chart now, you can see that the market is actually in an uptrend. You can see that the market is actually in an uptrend here. You can see the market is in an uptrend. You can see that the market is actually in an uptrend. So guys, but if you look to the left, here, you can see that the market was in a downtrend. So it was making this series of lower highs and lower lows, lower highs and lower low, lower high and lower low. You can see that anytime it breaks a previous low, it comes back to retest it. It broke this low here, it broke the low and came back to retest it. After retesting this last low here, it failed to make a new low. You can see it here. After market broke this low here, market broke this low, it came back to retest it but failed to make a new low. What did it? Just created a double bottom. So guys, a double bottom or a double top is actually a sign of reversal. Like once the market fails to make a new low or a new high, it signals it's a sign that the market might actually reverse. More likely, it's not like it might likely reverse. So you can see that this market actually broke our previous lower high and started trending up. Let's go to the 4H time frame so that you can see the zones properly. So you can see here on the 4H time frame, you can see our zone here. You can see that our last lower high, our zone from a daily time frame. See how the market broke that our last lower low and came back to retest this low, and then after retesting it went down but failed to actually make a new low, and then it came and broke this last lower high and started trending up and started making higher highs and higher lows. So we are in an uptrend now. So now after I have determined my direction, now we have determined the direction of the market. You can see that the market is actually trending up now. So I'll be looking for buys only. I'm looking to take buys in this market, in this Euro US now. So after now that I've determined my direction, the next thing that I do is to mark my zones. I'll mark my support and resistance zones. These are I'll mark my lower highs and my lower lows. Sorry, I'll mark my higher highs rather. In an option, we have higher highs and higher lows. So I'm going to mark my higher highs and my higher lows here. I'm going to mark my higher highs. These are my zones here. These are my zones. So guys, I'm done marking my zones here. So after I'm done marking my zones, the next step that I take is to go down to my entry time frame. Like, I actually take my entries on H1 time frame, although sometimes I do take my entries on 15 minutes, but I take my entries mostly on the H1 time frame. So now, after I've marked my zones, the next thing I do is to go down to my H1 time frame, which is my entry time frame, then start looking for my entry triggers. Like, depends on what you do, like your entry triggers. Mine, I do when I go to my entry time frame, there are things that I look for. There are candlestick patterns that I look for, and it could be for me, I do look for engulfing patterns, railroad tracks, spin bars. These are like the three candlestick that I actually look for, and if I see it, I take an entry. So if some people use M or W pattern, but I mostly focus on the candlestick patterns, and once they appear, I take a trade. So let's take a look at this. Let's take a look at this zone which was broken here. You can see this particular zone here which was broken. See this zone. You can see this zone here that was broken. You can see that market made a new high. Market broke this zone, made a new high, and came back to retest it. You can see where you tested this and gave a railroad track. This is a railroad track. So the market gave me a railroad track, and then after this candle close, you can enter here. After this candle close, you can enter here, and then you can leave the market up to take it to the highs. And then you can also see in this zone where the market broke. You can see this zone too. You can see here the market broke this zone here, this particular zone here, this previous lower high, and then it came back after breaking this zone. After breaking this zone, see, it broke this zone and then came back again to retest the zone and formed an engulfing pattern. So after market formed an engulfing pattern, see, as the market closed an engulfing pattern, you can just enter. Once this engulfing candle just close, we can enter here. So you guys can see these are the 3 steps that I take. These are the 3 steps that I take. The first step is first of all, find direction of the market. Is the market in an uptrend? Is it in a downtrend? Is it in a ranging market? So guys, let me just state that it's best you avoid a ranging market. The reason being that it can be caught in the wrong side of the market, because the market has not actually shown you the direction that it wants to go. It's not like it's not tradable, but it's better that you actually avoid a ranging market. So you can see how I analyze my charts. First of all, you have to determine the direction. After you have determined the direction of the market, the next thing you do is to mark your zones. After you mark your zones, then you now wait for those zones. You now wait for price to get to those zones, could come back to those zones, and once they do, you start looking for your entry trigger. This is when you start looking for entries. Start looking for your entry triggers. It could be um, um candlestick patterns. You can be chart patterns. I mean, you can look for me, I do look for railroad tracks, engulfment, pin bars. Sometimes I look for M and W pattern. So these are the processes that I follow. So guys, I hope that this video helps you um when you want to analyze your own charts. So guys, I hope this video is very, very helpful. Please don't forget to hit the subscribe button so that anytime I drop a video, you'll also be notified. Thank you, and see you in my next video. Bye.